Hey tech enthusiasts, welcome to the Monday edition of Tech Stocks Daily. I'm thrilled to kick off the week with some jaw-dropping roller coaster stories from NASDAQ. We've got Integral Ad Science caught up in legal whirlwind class action suits. Triumph Financial is shaking things up with a star-studded board nomination. AppLovin battling accusations of inflated figures. And the ever-thrilling Oracle on the edge of an epic third-quarter earnings reveal with potential AI magic on the horizon. Dive into these tales of strategy, suspense, and stock surprises that promise to keep you questioning, excited, and definitely coming back for more. Let's unravel today's tech stock headlines together. All right, folks, let's dive into today's headline featuring Integral Ad Science Holding Corp, or IAS, as it appears on NASDAQ. It's been quite a day for IAS as two major law firms, Rosen Law Firm and Levi & Korsinski, have caught the attention of investors with announcements about looming class action lawsuits against the company. So what's cooking in the IAS kitchen, you ask? Grab your popcorn as I unravel the saga of securities and suits. First up, the Rosen Law Firm has been stirring the pot by reminding investors about a bigwig class action lawsuit they filed against IAS. They're addressing common stock purchasers from March 2nd, 2023 to February 27th, 2024. The primary beef? Alleged securities violations centering around competition and pricing pressures that led IAS to slice prices due to declining demand and revenue hiccups. Those IAS pricing strategies were reportedly no longer favorable, and competitors' tactics were biting harder than expected, potentially leaving shareholders with a sour taste of misleading information and financial losses. Now here's the kicker. Rosen's deadline for becoming lead plaintiff is March 31st, 2025. For those less versed in legalese, a lead plaintiff steps up on behalf of others in the group to direct litigation. Basically, the one steering the legal ship into the courtroom battle. Switching gears, let's talk about Levi & Korsinski. They too are rallying shareholders affected during a similar timeframe against Integral Ad Science. Their premise echoes Rosen's. IAS was allegedly under the squeeze of competitive pressures and dropped the ball on clear financial communication to its investors. Levi & Korsinski are rolling out the same important March 31st, 2025 horizon for investors to come forward as lead plaintiffs. Both firms highlight that should you join their quest for redemption, there won't be any need to decimate your bank account up front. Costs could be covered under the mystical contingency fee arrangements. A free swing at justice, as one might say. Why are these cases grabbing the spotlight? It all boils down to trust and transparency. Allegations of misleading public statements supposedly cloaked IAS's marketist challenges and painted a seemingly more favorable situation. When discrepancies supposedly came to light, they allegedly left stakeholders holding damaged, undervalued stock. For companies trading in the cutthroat marketing metrics and ad verification game like IAS, even the smallest drift in pricing strategies can cause investor knees to wobble. So, investors are appealing to law firms with heavyweight reputations. They're here to suit up, dive into the evidence pile, and arm themselves for courtroom chaos, hoping at the end of it all to make wallets talk in legal language. Stay tuned for updates as more information filters through the tech vine. Whether you're riled, rifling through for updates, or just duck-duck-going details on lawsuits, remember, in the tech stock roller coaster, it's always good to keep your eyes peeled and seatbelts securely fastened. Triumph Financial is making headlines today due to the nomination of Melissa McSherry for election to its board of directors. This nomination is a significant move for the company, as McSherry brings with her a wealth of experience and a remarkable track record in the financial services sector, as well as in the realms of artificial intelligence, big data, and software development. The announcement comes ahead of Triumph's annual meeting of shareholders, slated for April 22nd, 2025, where McSherry's nomination will be up for election by the company's shareholders. So, who exactly is Melissa McSherry, and why is her potential addition to Triumph's board such a big deal? Well, her career is a fascinating tapestry of innovation and leadership, spanning key roles at companies like Anywhere Real Estate, Visa, and Capital One. At Visa, McSherry made quite a splash by spearheading the transformation of fraud prevention systems through advanced AI technologies, leading to an impressive 20% annual revenue growth. Talk about putting the eye in innovation. She also played a vital role in strategic acquisitions and tech-driven transformations at Capital One. Triumph Financial, a powerhouse with a diversified lineup of brands like Triumph Pay and TBK Bank, is particularly keen on leveraging McSherry's capabilities to fuel further growth and innovation. Carlos M. Sepulveda Jr., chairman of Triumph Financial, regards McSherry's tech expertise as a crucial asset for the company's ongoing evolution, particularly in its impact on the freight industry. Aaron P. Graft, Triumph's founder and CEO, echoed this sentiment, highlighting McSherry's adeptness in risk management and strategic visions that align well with Triumph's ambitions. From Anywhere Real Estate's enterprise solutions to fashioning sophisticated credit scoring models at HSBC, McSherry has continually showcased her talent for harmonizing cutting-edge technology with financial strategies. This aligns perfectly with Triumph's forward-thinking approach to financial services, notably in areas such as payments and financial technology, where the company aims to deliver actionable insights and value through sophisticated, AI-driven intelligence solutions. Triumph's emphasis on growth through innovation is evident in their strategic decisions, and McSherry is thrilled to be stepping into this acceleration lane at this pivotal time. She's ready to weave her expertise in data-driven strategies with Triumph's legacy to enhance their customer and stakeholder value, indicating an exciting turning point for the company. Given her educational background, with an MBA from Stanford and a magna cum laude degree from Harvard, McSherry is set to be a force to be reckoned with. In a nutshell, Triumph Financial's nomination of Melissa McSherry is more than just a new face on the board. It's a strategic move anticipated to drive transformative change, setting the stage for a bright and innovative future. Keep an eye on Triumph Financial as they venture into new horizons with their fresh mix of dynamism and tech-oriented strategies. Exciting times ahead. It's a stormy day for AppLovin Corp as they find themselves swept into two class action lawsuits, both riding the waves of allegations about misleading investors. Let's dive into the nitty-gritty of what's going on. The whole saga unfurled over claims that AppLovin may have been misleading investors about how golden their goose actually is. We're talking about allegations that they tried to put a bit too much shine on their achievements, particularly around their Axon 2.0 digital ad platform, a hub supposedly running on cutting-edge AI magic. The platform was meant to synergistically sync ads with mobile games while also dabbling in web-based marketing and e-commerce. Sounds impressive, right? But it might be more fairy tale than tech fact. The heart of the lawsuits claim that during the spotlight period between May 10, 2023 and February 25, 2025, the figures presented by AppLovin were jazzed up through dishonest advertising practices. Imagine nifty tactics involving ads supposedly clicking on themselves and cheeky design tricks triggering what they dubbed forced shadow downloads. Essentially, this made download rates bloom like magic mushrooms, completely inflating AppLovin's stock price and profitability reports. The fireworks truly began on February 26, 2025, following a cascade of analyst reports. These reports dropped bombshells, alleging that AppLovin channeled their inner spy, reverse engineering and exploiting ad data from meta platforms. It didn't take long for the market to react, with AppLovin stocks diving from a cozy $3.7706 to an unsettling $3.31 per share almost overnight. In light of these stormy developments, two sharks in the legal water, Robbins LLP and Levi and Korsinski LLP, have been rallying the investor troops. Both law firms are building class actions purported to recover money for investors embroiled in these allegations. The heat is on, with a deadline of May 5, 2025 set for potentially affected AppLovin investors to gather their papers and step into the court spotlight. Both firms present attractive propositions. There's no upfront cost to participate in these actions, with each team standing on its lauded history of corporate battle wins. In the meantime, curious bystanders and stakeholders alike are left analyzing every scrap of info available, from enlightening analyst insights to free-ain investor reports. This chess game also serves as a reminder of how swiftly tides can change in the tech sphere, where innovation often cohabitates with regulatory challenges and market volatility. To wrap up, AppLovin's story is a cautionary tale. While the final judgment is pending in this unraveling court drama, it shows the speedy fall from financial sunshine to overcast clouds, underscoring the vital importance of transparency and integrity in business dealings, especially in a sector as dynamic and closely scrutinized as tech. Stay tuned as the tale unfolds and more revelations possibly seize the stage. Oracle has been making headlines today as it's gearing up to announce its third quarter earnings after market close. Analysts everywhere have been crunching the numbers, setting the expectation that Oracle will report earnings per share of $1.49 with $14.39 billion in revenue. It's a pivotal moment for the company, especially since it missed revenue estimates last quarter and over the course of 7 out of the last 10 quarters. Whoops, the stock itself is in quite a noodle soup with a seriously bearish trendline. Just picture a skier at the bottom of a slope. Oracle's stock is trading below several key moving averages, such as the 5-day, 20-day, and even the mighty 200-day exponential moving averages. The technical indicators are screaming, "Danger, Will Robinson." However, with the relative strength index nearing the oversold territory, some are asking, is it time to pounce? It's like the stock is standing with one foot off a cliff, while investors are wondering if there's a trampoline at the bottom. On the analyst front, there's still some sunshine peeking through cloudy skies, with a consensus buy rating and some ambitious price targets thrown into the mix. Guggenheim, JMP Securities, and Cantor Fitzgerald are singing a hopeful tune, suggesting a 43.99% potential upside for those holding on for dear life to ORCL stock. Taking a closer look at Oracle's business strategies, there's some substantial chatter around its advances in performance in the AI sector. Oracle's known for missing estimates, but there's buzz about its AI endeavors being a magic wand to bring some much-needed sparkle back to its financial sheets. Larry Ellison, Oracle's co-founder, is sailing this AI ship, promising astronomical growth prospects thanks to high demand and revolutionary AI models. It's making science, economic development, and growth the new rock and roll. Adding some spice to the mix is Oracle's quieter but not so unnoticed role in the TikTok drama. Are they a buyer? Are they just the tech wingman? The suspense is real, folks. Let's keep our eyes peeled for any jaw-dropping news there. So, what do you think about Oracle's current position? Will AI be the wizard they need to save the day, or should investors keep their watts low and stay cautious for the time being? What's your hunch on Oracle's moves with TikTok? Did anyone say cliffhanger? Share your thoughts, comments, or just drop a witty pun in the section below. I'd love to hear what you have to say. Keep the conversation going while we wait to see if Oracle will ride this wild wave to a safe shore or if the sharks are circling. All right, folks, buckle up because we're diving into the world of Oracle. Given today's tantalizing tech news headlines, which portray a dramatic financial landscape for Oracle, what would I do? Buy, hold, or sell? Here's my take. Based on today's whirlwind of updates, I'd opt to hold Oracle stock. Here's why. Oracle's gearing up for their much-anticipated third-quarter earnings announcement. Sure, the company has missed revenue estimates 7 out of the last 10 quarters, and its current stock position has it looking like it's skiing downhill with a danger, Will Robinson, pressing down on multiple moving averages. But there's something brewing beneath this stormy facade. With the relative strength index nearing oversold territory, it signals potential overreaction, a trampoline waiting to bounce, perhaps. Adding to the cocktail of suspense, Oracle has seriously been diving into AI waters, a move that could breathe fresh life into the company's venture lanes. Larry Ellison's enchanting discourses on AI promise excitement akin to rock and roll. Plus, with big analysts like Guggenheim and Cantor Fitzgerald still singing praises with a substantial potential upside, it suggests investors are holding out for potential rewards. Let's not forget the elusive puzzle of Oracle's role in the TikTok arena. Is it a buyout theater scene, or them being tech wingman knights? The suspense practically mirrors a high-drama Netflix show. All this considered, if you already have Oracle in your stock closet, keeping it locked in for now and observing advancements in their AI escapades while waiting for this earnings shadow day to pass may be the way to go. But if unexpected good news bleeds through, it might turn the tech tide back to sunny. Remember, my tech-savvy hobbits, whether to buy, hold, or sell, always comes down to personal discretion and strategy. This is just a dash of commentary, with a pinch of insight on today's headline highlights. Always dive deep, do your own research, and consult with your financial go-tos for tailored advice. Stay tech-tuned. What a whirlwind of a day in the tech world. We've seen Integral Ad Science navigating through legal storms, Triumph Financial gearing up for a board shakeup with a star-studded nomination, AppLovin wading through allegations of shifty tactics, and Oracle on the verge of a major earnings reveal. Today's market activity showed us everything from lawsuits to strategic evolutions and cliffhanger financials ready to rewrite narratives. If you're intrigued by today's chaos, mystery, and prospects, don't forget to give this video a thumbs up, hit that subscribe button, and share it with your fellow tech aficionados. And hey, come back tomorrow for another round of all the buzzing tech tales that'll surely keep you on the edge of your seat.